Big Four deal strategy / transaction advisory, interview preparation. Welcome back to the channel. Today we're diving into deal strategy and transaction advisory interview preparation used across Big Four consulting teams. These questions come from real interview patterns across Big Four firms and global capability centers. Deal strategy focuses on evaluating markets, identifying targets, validating deal theses, and shaping investment decisions with structured commercial, financial, and strategic analysis. Let's begin. How do you assess whether a company should pursue organic growth, inorganic growth, or a hybrid strategy? Sample answer. I begin by understanding the company's current capabilities, competitive positioning, capital availability, and time-to-market needs. If internal capabilities are strong and the market is stable, organic growth makes sense. If speed, capability gaps, or scale advantages matter, inorganic growth is explored. Many firms land on hybrid strategies when both capability build-out and rapid market access are needed. While answering, always talk about strategic objectives, capability gaps, speed to market, and ROI trade-offs. A client is exploring multiple potential acquisition targets. How do you build a prioritization scorecard? Sample answer. I start by defining evaluation criteria: strategic fit, financial performance, market positioning, synergy potential, cultural compatibility, and integration complexity. I score each target based on data, management interviews, and benchmarks. The scorecard helps rank targets and highlight where deeper diligence is required. While answering, always talk about scoring criteria, weighting logic, data sources, and prioritization outcomes. How do you evaluate strategic rationale behind a proposed deal from both buyer and seller perspectives? Sample answer. I look at why the buyer believes the acquisition creates value: scale, capabilities, market access, or cost reduction. Then, I assess why the seller may want to divest, focus on core areas, capital needs, or underperformance. Understanding both sides helps reveal negotiation dynamics and strategic risks. While answering, always talk about value creation logic, divestment motives, strategic alignment, and negotiation implications. A company wants to diversify into a new sector. How do you conduct market attractiveness analysis? Sample answer. I examine market size, growth rates, competitive intensity, regulatory constraints, customer behavior, and margin profiles. I also assess barriers to entry and success factors. This helps determine whether the new sector supports long-term value creation. While answering, always talk about market size, growth drivers, competition intensity, and entry barriers. How you identify key value drivers during early-stage commercial due diligence. Sample answer. I start with customer needs, competitive differentiation, pricing strength, cost structure, and scalability of operations. Value drivers are those levers that materially impact sustainable revenue and margin outcomes. We validate each driver with data and external interviews. While answering, always talk about customer insights, competitive edge, pricing power, and scalability. A client wants to understand white space opportunities. How do you analyze unmet customer needs? Sample answer. I analyze customer pain points, segments not served well, product gaps, and unmet use cases. I use interviews, competitor mapping, and trend analysis to spot white space. Then I quantify potential demand and feasibility of entering that space. While answering, always talk about customer needs, market gaps, competitor gaps, and feasibility assessment. How do you estimate market size using top-down versus bottom-up methods? Sample answer. Top-down starts with industry-level numbers and narrows to relevant segments. Bottom-up builds from unit economics, customer counts, or channel data. I triangulate both to ensure consistency. While answering, always talk about assumptions, data sources, triangulation, and reconciliation. A company has declining market share. How do you assess competitiveness before suggesting M&A? Sample answer. I analyze customer churn, pricing power, product relevance, go-to-market effectiveness, and competitor moves. Then I assess whether M&A is needed for capability enhancement, or whether internal fixes can restore competitiveness. While answering, always talk about customer trends, competitor dynamics, capability gaps, and M&A justification. End. How do you conduct customer interviews during commercial due diligence without bias? Sample answer. I design structured questionnaires, avoid leading questions, and sample multiple customer segments. I cross-check interview insights with data, retention, pricing, churn, to avoid relying solely on opinions. While answering, always talk about sampling, neutrality, triangulation, and bias reduction. A target operates in a fragmented market. How do you assess industry consolidation potential? Sample answer. I review market structure, number of players, cost synergies possible through consolidation, regulatory constraints, and historical consolidation patterns. This helps determine if a roll-up strategy is viable. While answering, always talk about market structure, synergy logic, regulatory limits, and deal feasibility. How do you evaluate synergy potential during deal strategy planning? Sample answer. I quantify cost synergies, procurement, overhead operations, and revenue synergies, cross-sell, pricing, market reach. I test assumptions with benchmarks and pilot data. Then I classify synergies into achievable versus high-risk buckets. While answering, always talk about cost levers, revenue levers, validation methods, and risk categorization. A client wants to pursue a roll-up strategy. How do you assess feasibility and integration complexity? Sample answer. I assess market fragmentation, M&A pipeline, integration requirements, cultural compatibility, and operational scalability. Roll-ups succeed only when integration playbooks are strong and synergies are repeatable. While answering, always talk about fragmentation, integration demands, scalability, and synergy repeatability. Thank you for listening. How do you analyze pricing strategy and revenue model sustainability during diligence? Sample answer. I examine pricing elasticity, customer willingness to pay, discounting patterns, and competitive benchmarks. I also assess whether the revenue model is subscription-based, volume-based, or one-time, and whether it can scale reliably. While answering, always talk about elasticity, customer behavior, competitive pricing, and model sustainability. A target's management claims strong pipeline. How do you validate pipeline quality? Sample answer. I check pipeline conversion history, customer qualification discipline, sales cycle length, and win-loss ratios. I also verify whether large deals are real, approved, and budgeted. While answering, always talk about historical validation, sales discipline, pipeline ratios, and deal authenticity. How do you break down revenue by cohort to understand retention and churn? Sample answer. I group customers by acquisition period and track revenue over time. This reveals retention patterns, upsell potential, and churn behavior. Cohort analysis helps validate whether growth is durable or artificially inflated. While answering, always talk about segmentation, trend tracking, revenue durability, and churn insights. A company is considering entering a new geography. How do you evaluate go-to-market risks? Sample answer. I examine regulatory hurdles, customer behavior differences, local competition, distribution needs, and required brand investments. Entry risks are compared against expected returns. While answering, always talk about regulation, competition, GTM channels, and investment requirements. How do you perform competitor benchmarking and competitive landscape mapping? Sample answer. I compare competitors across pricing, features, margins, customer satisfaction, sales models, and market share. Landscape maps show clusters of similar players and white space areas. While answering, always talk about benchmark metrics, differentiation, positioning, and gaps. How do you assess potential deal breakers before proceeding to detailed diligence? Sample answer. I check for regulatory issues, customer concentration, revenue instability, cultural incompatibility, and insufficient strategic fit. Deal breakers help avoid wasted diligence efforts. While answering, always talk about regulatory flags, financial risks, cultural issues, and strategic mismatch. How do you evaluate internal capabilities of a buyer to execute a transformational acquisition? Sample answer. I assess leadership bandwidth, integration experience, technology maturity, and change management capability. A buyer may have a strong deal thesis, but weak execution capacity. While answering, always talk about capability gaps, integration readiness, governance maturity, and resourcing. A client wants to understand adjacency expansion. How do you assess scale synergies versus capability gaps? Sample answer. I map existing strengths and compare them with skills needed in the adjacent market. I quantify scale synergies while identifying capability gaps that may require partnerships or acquisitions. While answering, always talk about capability mapping, synergy potential, partnership options, and risk assessment. How do you analyze the impact of regulatory changes on a deal thesis? Sample answer. I assess upcoming policies, licensing requirements, compliance costs, and risks of regulatory tightening. I test the base case versus regulatory downside scenarios. While answering, always talk about regulatory mapping, cost impact, scenario testing, and deal thesis sensitivity. A private equity client wants to build an investment thesis. How do you structure your approach? Sample answer. I define the industry story, target archetype, growth drivers, value creation levers, and exit strategy. Then I align the thesis with financial models and market validation. While answering, always talk about growth drivers, value levers, exit logic, and evidence. How do you assess the defensibility of a target's business model? Sample answer. I test brand strength, switching costs, IP protection, customer stickiness, network effects, and competitive entry barriers. Strong defensibility supports premium valuations. While answering, always talk about barriers, customer stickiness, competitive moat, and long-term sustainability. A target has multiple revenue streams. How do you evaluate unit economics? Sample answer. I calculate contribution margins, customer acquisition cost, payback period, and lifetime value for each revenue stream. This shows where growth is profitable versus value destroying. While answering, always talk about margins, CAC LTV, payback, and growth sustainability. And growth. How do you determine whether a deal creates long-term shareholder value? Sample answer. I compare NPV of synergies, integration costs, capability uplift, and strategic alignment. I test sensitivity across various scenarios to confirm value creation robustness. While answering, always talk about NPV logic, synergy modeling, integration risks, and sensitivity testing. End. A client wants to restructure its portfolio. How do you evaluate divestiture candidates? Sample answer. I review each business unit's profitability, growth potential, strategic fit, and capital needs. Units with low synergy to the core, declining economics, or high capital intensity become divestiture candidates. I also assess market interest and valuation expectations. While answering, always talk about performance metrics, strategic fit, capital efficiency, and market attractiveness. /unquote. How do you analyze whether a business is platform ready for future add-on acquisitions? Sample answer. I evaluate scalability of systems, management depth, process maturity, product modularity, and integration capabilities. A platform business must absorb acquisitions smoothly and replicate synergies repeatedly. While answering, always talk about scalability, leadership capability, process maturity, and integration readiness. How do you perform reverse due diligence on the buyer's readiness? Sample answer. I assess the buyer's financial strength, integration capacity, governance maturity, and cultural flexibility. I also evaluate whether the buyer can deliver promised synergies. While answering, always talk about financial readiness, integration skills, cultural alignment, and risk mitigation. A target presents overly optimistic market forecasts. How do you validate assumptions? Sample answer. I test forecasts against historical performance, peer benchmarks, customer interviews, and independent market reports. I also run downside scenarios to test resilience. While answering, always talk about benchmarking, independent validation, scenario testing, and assumption discipline. How do you assess cultural alignment between buyer and target? Sample answer. I compare leadership styles, decision-making speed, incentive structures, communication norms, and operating philosophies. Cultural misalignment can destroy value, even if the financial thesis is strong. While answering, always talk about leadership style, incentives, decision culture, and integration risks. End. A deal involves heavy technology integration. How do you evaluate tech stack compatibility? Sample answer. I assess systems architecture, data models, APIs, cybersecurity protocols, and scalability. I also evaluate integration timelines and cost implications. While answering, always talk about architecture, data compatibility, integration complexity, and cost impact. How do you determine whether to recommend carve-out versus spin-off? Sample answer. I consider the parent's strategic goals, the business's standalone readiness, regulatory constraints, and potential buyer universe. A carve-out suits sales scenarios, while spin-offs benefit shareholders when markets value independence. While answering, always talk about strategic intent, standalone capability, regulatory impact, and valuation logic. A target is undergoing operational turnaround. How do you evaluate turnaround credibility? Sample answer. I review root causes of past issues, early signs of improvement, leadership changes, and execution discipline. I validate turnaround claims with financial trends and customer feedback. While answering, always talk about root causes, execution capability, leading indicators, and independent validation. How do you identify and quantify revenue synergies versus cost synergies? Sample answer. I break revenue synergies into cross-selling, pricing lift, and expanded market reach. Cost synergies come from procurement, overhead, and shared operations. I quantify each using benchmarks and sensitivity tests. While answering, always talk about synergy buckets, quantification logic, benchmarks, and sensitivity analysis. How do you assess customer concentration risk during deal strategy? Sample answer. I analyze revenue dependence on top customers, contract duration, renewal rates, pricing stability, and switching risks. A high concentration weakens defensibility and valuation. While answering, always talk about concentration ratios, renewal risk, margin exposure, and mitigation levers. A business claims significant competitive moat. How do you test the validity of this claim? Sample answer. I verify barriers to entry, customer switching costs, proprietary technology, network effects, and brand loyalty. I also review competitor strategies to ensure the moat is real and not overstated. While answering, always talk about barriers, switching costs, competitor validation, and sustainability. How do you align deal strategy with long-term corporate strategy for the buyer? Sample answer. I map deal objectives to the company's growth themes, capability roadmap, geographic priorities, and risk appetite. A deal must accelerate strategic goals, not distract from them. While answering, always talk about strategy alignment, capability mapping, risk appetite, and long-term value. A buyer wants a differentiated bid strategy. How do you prepare the winning storyline? Sample answer. I craft a narrative showing superior synergies, faster integration, strong cultural fit, and strategic alignment. We highlight certainty of close and value creation credibility. While answering, always talk about narrative building, synergy logic, cultural fit, and certainty of close. How do you validate channel strategy and partner ecosystem of the target? Sample answer. I assess channel mix, partner margins, incentives, churn, and channel-driven revenue. I also review whether the ecosystem is scalable or overly reliant on key partners. While answering, always talk about channel mix, partner economics, scalability, and dependency risk. End quote. How do you evaluate post-merger integration PMI readiness before deal signing? Sample answer. I assess the target's data quality, organizational structure, systems architecture, and cultural posture. I also review the buyer's integration playbook and leadership bandwidth. While answering, always talk about data, systems, organization readiness, and integration governance. A client wants to increase valuation multiples. How do you help identify value creation levers? Sample answer. I examine pricing opportunities, product mix shifts, cost optimization, retention improvement, and GTM strengthening. Highlighting these levers improves forward-looking valuation. While answering, always talk about growth levers, cost levers, pricing power, and valuation impact. How do you benchmark targets' KPIs against industry best practices? Sample answer. I identify relevant KPIs, churn, LTV/CAC, margin profiles, sales productivity, cash conversion, and compare them with peer benchmarks. The gap analysis reveals improvement areas. While answering, always talk about KPI selection, peer comparison, performance gaps, and improvement insights. A target has inconsistent pricing across markets. How do you analyze pricing power? Sample answer. I review price elasticity, discount patterns, customer willingness to pay, and competitive pricing. I normalize prices to identify where inconsistency reflects market factors versus internal issues. While answering, always talk about elasticity, discounting, competitive reference, and pricing levers. How do you model scenario-based outcomes for the investment thesis? Sample answer. I create base, upside, and downside cases using varying assumptions on revenue, margins, and synergies. Scenario modeling tests resilience of the thesis under uncertainty. While answering, always talk about assumptions, base versus downside logic, sensitivity drivers, and risk-adjusted outcomes. A buyer wants to pre-empt competition in a hot deal. How do you advise on quick but thorough diligence? Sample answer. I focus on red flag diligence, revenue quality, customer concentration, legal exposures, and technology risks. Fast, targeted diligence protects the buyer without losing deal speed. While answering, always talk about red flags, prioritization, speed versus depth, and risk mitigation. How do you evaluate risks associated with key person dependency? Sample answer. I identify critical roles, review succession pipelines, assess retention incentives, and test how much customer relationship value sits with key individuals. While answering, always talk about dependency mapping, retention risks, succession depth, and mitigation plans. A company aims to transform digitally. How do you assess digital maturity and synergy with target? Sample answer. I evaluate digital capabilities, data, automation, customer platforms, and analytics. I identify synergy in tech stack, digital skills, and product innovation potential. While answering, always talk about digital pillars, maturity gaps, synergy potential, and integration needs. How do you validate sustainability and ESG claims as part of deal strategy? Sample answer. I review ESG disclosures, energy usage, supply chain ethics, compliance records, and external ratings. I also test whether ESG claims translate into real operating advantages. While answering, always talk about ESG metrics, validation methods, regulatory alignment, and business impact. A client asks whether to build, buy, or partner for a new product line. How do you evaluate options? Sample answer. I compare time to market, capital investment, capability needs, and strategic control. Build offers control but takes time. Buy accelerates entry but requires integration. Partnership reduces risk but limits upside. While answering, always talk about capability gaps, cost versus speed, control considerations, and risk sharing. After identifying a potential acquisition, how do you help create a board-ready investment memo? Sample answer. I summarize the deal thesis, market attractiveness, target performance, synergy estimates, integration plan, risks, and valuation. The memo must be crisp, evidence-backed, and decision-ready. While answering, always talk about structure, evidence, risks, and decision clarity. Thank you for watching, and if you liked our video, kindly press the like button and leave us a comment. This will help us reach a wider audience. Don't forget to check the playlist for more great learning.